Welcome to our Join the Discussion PPP Round 2. Our hope continues to be an effort to bring you all value and ultimately some clarity around the available economic relief efforts that have been set forth through the CARES Act and now the recent Economic Aid Act. My name is Aaron Panton. I'm the Regional Bank President covering our Cape, Jackson, and Northern Scott County markets. I'm joined today by Jeff Hotop, our Community Bank President in Cape Girardeau and Northern Scott County. Our goal today is to help you take full advantage of the resources that are available to help businesses continue to weather the economic uncertainty that exists due to COVID-19 pandemic. You know, much of this is our interpretation of the guidance that's been issued. We continue to leverage many industry resources, including but not limited to the Small Business Administration, the Independent Community Bankers Association, and the American Bankers Association. We'll start off with some updates, walk through those updates before we take a deep dive into PPP first and second draw. So the first update we have, the SBA portal has officially opened up for all lenders effective Tuesday, yesterday, January 19th. We have begun sending applications to the SBA, and that includes both first and second draws. Submissions to the SBA have occurred, and we are at this point awaiting SBA loan numbers. The process is a little different for those of you who took advantage of the PPP first round. The SBA used a system which they had implemented and have used for years to accept applications, and we were able to obtain a loan number immediately following a submission. The change this go around is the SBA has moved to a new system which they've implemented for the forgiveness, and that system there is a delay in issuing an SBA loan number. So we have submitted nearly 100 applications to this point and are awaiting. We expect within 24 to 48 hours that SBA will complete their initial review and issue a loan number. But I did want to call that out, that it is a little different this go around than it was the first round. SBA has issued a procedural notice on Wednesday evening, the 13th, last week, following our call. They did clarify a few items. One of the items to note is with the change to farmers and ranchers, those who qualified for a loan, took one, and have not yet applied for forgiveness can work with the lender of record to submit an increase to the loan amount. This procedural notice also provides clarity for us as lenders and borrowers to navigate through that first draw process. SBA issued an interim final rule, the second draw PPP revenue reduction calculation. So Jeff will talk a little bit about that coming up, but they did provide some additional clarification on max loan amounts, documentation required, and the revenue reduction calculations. In addition to the interim final rule and clarification on the revenue reductions, the SBA released loan forgiveness forms, new loan forgiveness form on loans less than 150. There is a new form that was issued as well yesterday evening, late evening, for borrowers' disclosures of certain controlling interest. So this is a continuous evolving process that we'll do our best to try to not have to go back and provide multiple communications and documentation and consolidate all of this early on. Jeff, any highlights or topics or questions that you have or have had that you want to address regarding any of the recent changes that have come up?
Not necessarily specific to the recent changes. I think a lot of the changes we've seen here in the last few days have been consistent kind of with our process and what we've been looking at and gearing towards. Just as you know, kind of give some insights to our current process. We are currently leveraging a platform called SageWorks. They're a financial technology provider that we've partnered with in the past. So this does allow us to have a digital application, an online portal where folks can go in and complete their applications. But it doesn't have to be only digital. So we can also do accept paper applications. We've also done a couple over the phone. And so we do have a variety of ways in which we can accept applications. Our preferred method is the digital, just because it gives it out to many people and speeds us up, but certainly doesn't have to be the only way we accept applications. So if you have not applied for a PPP loan at all and you're a first draw applicant, certainly let us know, and we can get you either a link to our digital platform, or get you, a paper application, or even do it over the phone by appointment. And same goes for a second draw application. If you do choose to use our portal, we have gone through the effort of putting together a couple really good how-to kind of step-by-step processes with screenshots and everything. So if you're working on an application today, or will be working on one in the future, and would like some of those resource guides, that is something we've recently created, and can get those into your hands as well. Reach out to Aaron or I or your lender, and they can provide those resource guides to you as well.
So before we dive into the actual programs, I thought it would be prudent to go back through the timeline where we've come. It's been quite the interesting 12 months. It's not been the easiest 12 months to navigate by any means. So where did we start? The Coronavirus Aid and Economic Security Act, or CARES Act, was signed into law March 27th of 2020. That bill set the stage for many of the programs that we're going to cover today. The SBA issued their first interim final rule, or we'll refer to as the IFR, on April 2nd. That rule was a joint effort between them and the Treasury. The rule outlined the program that many of you are familiar with, and that's the PPP, and we'll spend a lot of time on today, or otherwise known as the Paycheck Protection Program. The PPP was implemented with the intent of helping businesses keep their payroll intact, retain employees through a time of great uncertainty and government and community shutdowns. The SBA introduced the details for the PPP loan on April 2nd through the IFR, which turned out to be one of 23 iterations that was released between April 2nd and August 8th. It's quite the task to keep up with that. 23 separate iterations or modifications to the program in a very short period of time. On August 8th of 2020, the PPP loan program concluded and no longer was available to consumers and small businesses. Fast forward, on December 27th, the president signed into law the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act, or we'll refer to it as the Economic Aid Act. The Economic Aid Act authorizes SBA to reopen the PPP loan program for first-time borrowers who were not able to take advantage the first round, and allows for a second draw of PPP funds for qualified businesses through March 31st of 2021. I'm going to turn it over to Jeff to walk through some of the finer details of a few of the programs that are available. Jeff?
Thanks, Aaron. Yeah, so as Aaron said, we're off to the races on the next round of programs. So PPP is the one on most people's minds, but want to spend a little bit of time just kind of briefly hitting a couple other programs that are available through the SBA. As at the Bank of Missouri, we get a lot of questions from a lot of people, and sometimes some of these programs get kind of blended together. So I thought it'd be good to kind of peel them apart a little bit, separate them out, and then we'll dive a little deeper into the PPP here shortly. So the first program that we get asked a lot about is the EIDL program, the Economic Injury Disaster Loan Program. So the EIDL really has two separate parts. The first one is the grant. So the EIDL grant, I've heard this referred to as the EIDG, a lot of different names, but I'm gonna call this the EIDL grant. This program has a $10,000 cap This first became available back in April of 2020. Due to demand, the SBA, one of the 23 changes that Aaron mentioned, at some point they changed this to $1,000 per employee, capping out at $10,000. This grant does not require any repayment. It also does not require an application for forgiveness. So for borrowers that have received these, they receive the funds in their accounts, and then it's pretty much done. There's nothing else to do at that point. These applications for the EIDL grant are directly through the SBA.gov website. So that's not anything the banks are facilitating. The SBA.gov website are facilitating the EIDL grants. These are not available at this time, but the reason I mention it is because in the recently passed legislation, there was some clarity given around these. So we do suspect that this could reopen at some point. At least the parameters are there for it to be reopened. So that's one thing we are keeping our eye on with the SBA to see when they might reopen this grant. And when they do, you'll go onto the SBA.gov website to learn more and to apply if you're interested. The other clarity around the grant that came out was around the forgiveness. And so at certain points through the PPP program, the original program, if you applied for forgiveness and had received a grant, the amount of the grant was being withheld for forgiveness. This has changed with the bill passed on December 27th. And so the SBA has already stopped withholding those grant funds for forgiveness. And moving forward, they will be sending the banks an ACH to kind of level set or make up for those grants. And so if you are a client or know of anyone that received a grant but had it withheld, please know the SBA is working on getting that those funds back either to the bank if that's still held here as a note, or back to the borrower if that's already been paid. So that kind of summarizes the EIDL grant. I also want to talk about the EIDL loan program. And so again, this is directly through the SBA.gov website. So the Economic Injury Disaster Loan Program, this is not a new program for the SBA. And this has existed for years, was traditionally offered to areas that had some sort of economic disaster, primarily through natural disasters, hurricanes and floods and that sort of thing. With COVID, they've expanded this program nationwide. So any business can apply based on COVID, essentially. So these loans are designed to help businesses for working capital purposes. So working capital to help businesses pay obligations for 6 months. These loans have a 30-year term and a fixed rate of 3.75%. The SBA determines the loan amount based on working capital needs. Some expenses they look at are cost of goods sold. There's not a good parameters or calculation because again, this is an SBA direct program. So this isn't a program that's given to the bank. So we don't have a ton of detail, but we do know, learning from the SBA and from some of our clients that have successfully applied for these loans, collateral is required for loans over $25,000, but the SBA does not decline a loan for lack of collateral. Typically what we've seen is a blanket UCC on all business assets against the borrower. That's the most common thing we've seen as far as collateral goes. And again, I can't reiterate enough, these loans are directly through the SBA at the SBA.gov website. And so that's kind of an overview of both the EIDL grant and the EIDL loan programs. Separate from the PPP, but just want everyone to be aware there are separate programs outside of the PPP if you're looking for additional help. So next we're going to start to dive into the PPP first draw loan. So Aaron, you want to kick us off there?
So generally speaking, PPP loans, for those of you who are not familiar with PPP loans, real high level overview. As I mentioned, it was designed to provide payroll opportunities and loans to small businesses to retain employees and continue to make their payroll. Generally speaking, these loans do not require collateral. They do not require personal guarantees. They are structured at a 1% interest rate for 5 years, and potentially, and most importantly, forgivable. No payments are required on these loans following for 10 months following the covered period, which Jeff will explain a little bit more. So Jeff, you want to dive into those details?
Right. So again, talking about the first draw PPP loans, and so some changes have been made, and so I think it's pertinent to cover these, and then this will help put us into light the second draw PPP loans. So these are for folks that haven't received a PPP loan yet. Some of the changes and/or requirements. First of all, the business has to prove they were in operation on February 15th of 2020 and not permanently closed. And so we'll talk about required documentation here shortly about how we go about that. This opens up eligibility to some new areas. One of those are 501c6 entities. And so if you are one of those or represent one of those, we can talk more about your first draw PPP, because this is now available to you. It increases or allows for increases for partner compensation, seasonal employers, and again, those who did not accept any PPP, or those who didn't even accept the full PPP. So some borrowers could have elected to return all of their funds. They may have signed up and said, hey, you know what, I don't need it. And they may have signed up and said, I only feel good and we're going to give part of it back. Or they just maybe didn't, maybe they signed up and didn't accept it. And so if there's been any unforced repayment from the borrower, they can go back and kind of reapply for that first draw. The calculation on how you determine how much you qualify is largely the same, but there's been a little bit of flexibility added here. And so the calculation is still 2.5 times the monthly payroll. So the way that that's determined is back in April when we were doing these, we were taking the 2019 total payroll expense for a business, dividing it by 12 to get a monthly average, and multiplying that by 2.5. And that still applies, except for the applicant can now choose either full year 2019, full year 2020, or the last 12 months. And so there's some flexibility on how they determine what the payroll expenses, the time period for the payroll expenses in which they wish to generate that monthly average. This first draw program has also made a change for farmers and ranchers. And so in the first iteration of this program, a farmer was to use their net income from their Schedule F. This now allows farmers and ranchers to use line 9, which is gross income. So that could be more inclusive for farmers and ranchers to be maybe a little bit more friendly through this new first draw program. It's also been more inclusive from an expense and forgiveness standpoint. So payroll, as Aaron mentioned, is the first and foremost reason for this program. There is still the 60% benchmark that of forgiveness, 60% of that, a minimum of 60% of that has to be payroll. It can be more, it can be all of it. But now included expenses, which we've had rent, interest, and utilities back in April. But this has now added additional expenditures such as operation expenditures. And examples of this is like technology that businesses need to buy to adapt to a changing environment. Supplier costs and personal protective equipment are now part of the forgivable expenses. So information needed. So I mentioned we need to show that a business was in operation on February 15th of 2020. The most common way we've seen this is a payroll statement. So for those entities that do have employees and wages, we simply get a payroll statement for the month of February. That checks the box for SBA very nicely. For those that didn't have payroll, sole proprietors and farmers, for example, a bank statement in February should also suffice. Other information we would need would be the payroll summary. So again, we could accept 2019, 2020, or the last 12 months of a payroll summary. And that's how we'll base kind of the average payroll to figure out the loan amount. And then lastly, we need either the 2019 or 2020 tax forms. Again, that is determined based on the time period for the payroll summary, and then a Schedule C for sole proprietorships, a Schedule F for farmers and ranchers. These applications for the first draw loans are available, so we're taking them until March 31st of 2021. So that's been the date we've been provided by the SBA for now. So before we move on to the second draw PPP, Aaron, any thoughts or ideas behind the first draw opportunities that I may have missed?
No, I think you covered it well. A couple of thoughts that I have or highlights maybe call your attention to, and the differences on that first draw opportunities really centered around farmers and ranchers. Much of the guidance that was issued early in the process really reduced the amount of available funds for Schedule F borrowers and businesses. So this modification really opens that up. I'd highlight we've got a wide variety of folks on the call, customers and partners, share that information with clients, friends, colleagues, and family. The other highlight I'll just mention is the big change in the ability to use 2019 or 2020. Really is an opportunity for you as the business owner to decide what is the most beneficial. As Jeff mentions, the loan amount is based off of payroll. And so use that most beneficial time frame. The Schedule C, the sole prop, much of the guidance that was issued the first go around was late in the process. And there were many that did not or were not able to take advantage of the first draw funding. So another great opportunity there. And just, I think we don't want to lose sight. Yes, the second draw is important and it's going to play a critical role in the overall, but there are so many that were unable to take full advantage due to the changing regulations at such a rapid pace. So good news there. Thanks, Joe.
All right, so we'll move on to the PPP second draw. And before I dive in here, it's important, I just realized, need to reiterate that there is a $100,000 cap per employee or per applicant. And so if you are a business that has employees, there is still the $100,000 cap per employee on how the loan amount is calculated. If you're a sole proprietorship or a farmer, it's still a $100,000 cap also applies there as well. So there is a maximum amount of funds per employee that you can borrow through this program. So the second draw mirrors a lot of what we just talked about, including the $100,000 cap. There are some really important details here that we need to talk about. And so first is who qualifies for this PPP second draw? And there's really two main things to consider when you're thinking about a PPP second draw. Number one, you must have already received the first draw. And I'm gonna read this carefully because this is a lot of what we talk about here is directly from the SBA. You must have received and will or have used the full amount of the first draw funds on authorized uses. So we've got a lot of questions at the bank about, hey, I haven't received forgiveness. Am I still available? Or is the PPP draw still available to me if I haven't received forgiveness yet? Yes, it is. I haven't applied for forgiveness yet. Is it still available? Yes, it is. Again, what is trying to hash out is if you have or have not received a first draw. As long as you've received a first draw and have used the funds based on appropriate expenses, you would be included in the second round draw as long as you meet the rest of the parameters. The second important piece or important parameter to think about in the second draw has to do with the reduction in revenues. And so the borrower or applicant must demonstrate at least a 25% reduction in gross receipts, aka sales, between comparable quarters in 2019 and 2020. So for me, I understand things a lot better in examples. And so for a business who maybe had a rough second quarter of 2020. A lot going on in the second quarter of 2020. So maybe they say, hey, that was our worst quarter and we want to think about applying for a second draw. What they would need to do is look at their total sales in quarter 2 of 2020, compare that to total sales in quarter 2 of 2019. And if there's a 25% or more reduction, they would meet that qualification. To be clear, it doesn't have to be quarter 2, it can be any quarter of 2020. You do have to compare to the same quarter of 2019. There is also a stipulation that allows us to look at annual numbers. So if your annual 2020 sales were 25% lower than your annual 2019 sales, that would also be inclusive. You would be able to apply for the second draw PPP loan. And really that has just a determination of documentation depending on which one you apply for, and we'll get more into that here in a minute. These second draw loans are capped at $2 million. That's compared to $10 million in the first round. And then applicants that have a NAICS code of 7.2, that's normally hospitality, restaurant type of industries. Those industries have some more flexibility around this program. So for everyone else, it's a 300 employee cap. For NAICS code of 7.2, it's a 500 employee cap. And then for everyone else not in that code, it's 2.5 times payroll, mimics the first draw, 2.5 times your average monthly payroll. For restaurants and hotels and other industries that match that 7.2 hospitality code, they can get up to 3.5 times their average monthly payroll. And so clearly this is designed to help the hotel, restaurant, hospitality type industry the most. I guess the SBA sees those as potential folks that were potentially harmed the most. So that's coming straight from the SBA and their determination of that. When we talk about that 25% reduction, there is a line in the sand at $150,000. And so if your loan amount is above $150,000. In other words, if your second draw loan that you're applying for is above $150,000, that 25% reduction must be documented to the bank so we can document it to the SBA at time of application. So again, applying for a loan of $150,000 or above, we have to have the 25% sales decline at time of application. If you're applying for a loan of less than $150,000, the documentation for that isn't required until time of forgiveness. So in other words, forgiveness is probably a few months down the road for the second draw loan. So if you're applying for a loan of under $150,000, the documentation for the 25% reduction is required at time of forgiveness. That's upon the applicant to determine whether they qualify. They still do have to input numbers. So part of the application is providing sales numbers, but the documentation to back those numbers up aren't required until time of forgiveness. These applications are also accepted up until March 31st of 2021. And the borrower, another minor tweak, the borrowers can select a covered period of 8 to 24 weeks. Again, that covered period is the time in which the borrowers have to spend the funds. Prior to this bill being passed, they selected either 8 or 24. This allows flexibility of up to 24 weeks. You can select 13, you can select 15 weeks. You can basically select whatever time frame you want, as long as it doesn't exceed 24 weeks. So that's kind of a overview of the PPP second draw, the main qualifications and the main changes there. Aaron, I'll turn it back over to you in case you see any insights there or anything that I missed.
Yeah, no, good overview. You know, there's one thing you mentioned this prior on the first draw on the 100,000 income cap. That isn't as it specifically related to the loan amount. That will be specifically related to the loan calculation. So we'll elaborate a little bit more on that as time goes. And I think a couple of highlights there on the second draw. is obviously what you called out, the 3.5 times for the 72 NASCO. It's a great opportunity for the hospitality industry to capitalize, maximize their loan proceeds, again, with that caveat of the $2 million cap versus a much greater cap in the first draw of 10 million. Timing on providing the documentation of the revenue reduction, as Jeff mentioned, over 150 and under 150. This is where we'd love to come in and work with borrowers early in the process. It's good timing. Maybe the accountants, CPAs on the phone wouldn't agree. It's a good time with it being tax season and revenue, taxes being prepared and all that. So the timing piece on the 150, I think it's really important to work closely with your lender on identifying that reduction and use the timing gap when providing it for forgiveness to compile that in more formalized manner. There are a couple, as Jeff will talk about here in the documentation, ways to document that should be easily obtained early in the process. But yeah, it's a good overview, Jeff, and we'll get into questions and more details as the call goes on.
Yeah, so let's talk a little about the required documentation for these second draw loans. So just like the first draw, we've got to show the business. The applicant was in business on February 15th of 2020. So again, that February payroll statement or bank statement, depending on the type of borrower, is crucial. Similar to the first draw, we need that chosen period in the payroll records for that chosen period. And so that's 2019, 2020, or the last 12 months, that payroll summary that covers the period. We also are required to have both the 941s and the 940s. So those are the state, both quarterly and annual unemployment tax forms. For those that have applied for the first draw, we have those for the first draw. If you elected a 2020 payroll year, for example, the 940s and 941s we might have on file today are 2019, for example. So depending on the time frame that you select for the payroll period, we may need to get some additional forms there on the 940s and 941s. Again, for applicants that do have employees and are paying retirement benefits, group health, life, disability, or any other kind of benefits out there, we do need evidence of those benefits and the costs associated to them. Focusedly really mainly on the costs associated to the applicant. For self-employed, we will need the Schedule C for the chosen period, either 2019 or 2020. And again, for sole proprietorship, they have the option to choose 2019 or 2020. So perhaps a sole proprietor had more success from a net income standpoint in 2020, or maybe in a period now in the first part of 2021 with some serious economic uncertainty in front of them. So they may elect to choose 2020 as their basis. And the same thing goes for the farmers. We'd need the Schedule F, obviously, either 2019 or 2020, and the partnerships, we would need the K1 for either 2019 or 2020. So really, it's all about the flexibility that's been added just to allow folks to maximize this opportunity. And so that's kind of an overview of the required documentation. We don't expect anyone to memorize any of this. Please know that Aaron and myself and our great lending staff, we're on top of this. And so some of this is a case-by-case basis, but just to kind of give a broad overview, get everyone thinking about what this looks like and what those documentations need to be. That's a pretty good overview right there. So forgiveness terms. Aaron, do you want to take on forgiveness terms?
So in general, the PPP loan, whether it be first draw or second draw, one of the primary attractants to that program not only is access to that liquidity, is the forgivability of the loan. So there are two main points that must be hit in order to qualify for forgiveness, and that is maintaining employee levels and compensation levels. and using the funds for the approved purposes. Jeff mentioned a few of those. At least 60% of the loan for the first draw and the second draw, 60% of the proceeds must be spent on payroll costs. Those payroll costs are going to be really all expenses associated with payroll, with the exception of federal taxes and unemployment. So we have a detailed list of that, and those of you who've gone through that process on the first go around may not come into play being able to leverage a longer covered period of the 24-week, but that's definitely one offset we can handle. There are a couple of adjustments that the Act introduced on December 27th. They have yet to be released, but one of the big topics is around the ease of forgiveness. There is a one-page form coming out for all loans that were originated, PPP loans that were originated under 150,000. As part of the Economic Aid Act, the SBA will be issuing new, more simplified forgiveness guidance. Per the regulation, the SBA has 24 days to issue guidance. That date, and we'll stay close to, is January 26th. This guidance will also include a new forgiveness application. I was on a call this morning with the SBA, and they addressed this and shared that they're anticipating releasing that short form and forgiveness process and guidance on Friday, January 22nd. We believe that it'll be more of an attestation, little to no documentation, and streamlined. So we've covered a lot. I'll throw a couple more on there real quick. I think are relevant changes in the last Economic Aid Act. The taxability changes are something that's been circulating out there and that are extremely important. The PPP loan proceeds will not be taxable, and the expenses associated with the use of those funds will not be taxable. Our SBA existing customers over the course of 2020 had been receiving SBA payment subsidies. Those payment subsidies are back. They are issuing an additional 3 months. So if you are an SBA, have an SBA loan, the SBA beginning in February will begin making your principal and interest payment with a cap of $9,000 per month. If you are in a NACE code 72, as mentioned earlier, there will be an additional 5 months of payments made on your SBA loan, bringing the total to 8 months. The SBA is also waiving on new loans, new SBA 7A loans, guarantee fees and no fees through September, through the fiscal year of September 30th of 2020. In addition to waiving the fees on new SBA loans, they will also be making 6 months of payments for loans approved February through September. So there are a lot of products and programs and idiosyncrasies in all of those, but there are definitely a great deal of resources available to our small businesses. And hopefully that's a high-level overview and snapshot of what we are seeing. So I guess at this point, I open it up. We've got a couple of questions I see in the chat box, but this was presented to you all as a discussion, and we want to follow through with that and create an opportunity and a space where we can get this information out, but also engage in specific questions that you all have to make sure that we're researching and following through on the things that are relevant to our community, and we are pushing the issues and topics that are relevant to our region. So your feedback is appreciated and welcome. So what we'll do next is kind of open it up for questions. Blake, do we have any questions that are kicking out there?
Yeah, I'll just kind of start with everyone that will have these questions. We'll kind of do it two ways. One, if you feel like typing it out, go ahead and do so on this, and I'll address them and read them out for the whole group to hear. If you are the type that would rather ask the personal question, we can certainly do that. Just list your name in the chat, and I'll unmute you so we don't have people talking over each other. So first and foremost, Aaron and Jeff, will you touch on how, maybe not banks as a whole, but how the Bank of Missouri plans to handle the forgiveness application?
Sure. So I'll take this one. So for both the first and the second draw, we're going to use one of our technology partners, which is SageWorks. This will allow us to have a digitized online, fully online application. Those will be sent out via links through your lender. If you don't have a lender, Aaron and I will share our contact information at the end of this so you can reach out to us. These links, we haven't started sending these links out yet. This goes live as soon as Friday, as Aaron mentioned. We're working out some of the final bugs. Remember that this application came out over the weekend, and so we're about 99% of the way there, but we'll start sending these out via email through a link. And so if you have applied before, you apply for a second draw loan. If you've not applied before, you apply for a first draw loan, but that would come through a link that we will send and leveraging our technology partner, SageWorks.
Thank you, Jeff. Anything to add on that, Aaron?
No.
Okay, so I think that gets that one. Bev had the question, if you've applied for forgiveness, how long should we expect to wait? I just realized that I responded to her directly, and so the group, you want to go ahead and touch on that just very briefly, Jeff?
Yeah, I'll take it. So this is another common question. I thank you for asking. So in regards to forgiveness, so we obviously are also accepting forgiveness applications as well as new loan applications. And so as far as forgiveness, the SBA has up to 90 days. So that's what they have. I will speak by experience. We have had several loans be forgiven by the SBA. Some of them are taking 2 or 3 weeks. Some of them are taking almost the entire 90 days. And there seems to be no rhyme or reason. Dollar amounts, just because they're taking longer isn't a bad thing. It's just kind of no, we don't fully understand the SBA's process on forgiveness. What we do know is we've seen a lot of good things, a lot of headway. They've been really great to work with, frankly, for forgiveness. So we don't have a whole lot of apprehension. And when they do have questions, they've done a great job of reaching out to us as the lender, asking the questions, and then we give those questions as we get them back out to our borrowers. So if you've applied for forgiveness and have not heard anything, it's a good thing. We'll only kind of reach back out either once we have confirmation that the loan's been forgiven or if the SBA has required additional information.
Thank you, Jeff. And I will point out again, if some of these questions are very specific to your own personal loan, very situational, I would encourage you just to reach out, like Jeff said, to your specific lender or to Aaron and Jeff after this with their contact information, and we can give you a little more one-on-one discussion. So moving through some of these questions here, we have a question from Tim Bryant. If you received an EIDL loan, are you eligible for round 2 of PPP?
I'll take that.
Great. Yeah,
that's a great question.
Yeah, great question. So you can do both the EIDL program and the PPP program. So one does not exclude you from the other.
Perfect. Another housekeeping one, Jeff or Aaron. What is included in average payroll figure? I think there's some confusion on that outside of just actual gross wages, 401k, health insurance, taxes, etc. And also to follow up on that later, there is the question about federal taxes. So if you can kind of lump all that into one.
Sure. So the payroll, what's included is employer paid benefits. So if you have group health benefits that are employer paid, and then any other health, life, disability, vision, dental benefits, in addition to the retirement benefits, employer paid benefits are included. I did see the question come through about the federal, and yes, the question was, I think I may have said you cannot use federal taxes. We meant to say federal withholdings. So federal withholdings aren't included, but yes, federal taxes in forms of a tax return is something that is a required document. So thank you for asking for the clarity there.
Great, thank you. Again, there are a couple on here that are a little specific to the individual borrower, so I would just kindly ask that you reach out to your lender on that one.
Blake, I'm looking through here and I see a couple of questions. You know, one of them that I'd like to address, I don't think we covered throughout the program, is when calculating gross revenues, you do not include previous PPP funds that were received. And so I think the question here is, we will not include previous PPP funds. Now, sole props, that's maybe a little different because it is listed as income. And so we can get into that a little further and dive into some clarity with the SBA.
I saw one in here too I wanted to address. It is a great question about how owners pay themselves. So a company who has employees, they also pay themselves as owners, and how that gets treated. And that was a common question and a great one, I think, for this discussion. So some business owners choose to pay themselves through payroll. So they get a payroll check just like the rest of their employees get a payroll check. When that's the case, they are included in the payroll summary. There are also cases where business owners may not be included in the payroll and are compensating themselves elsewhere through compensation or different things that are available to them. And so that they are included. Again, you have the $100,000 cap. So those expenses can be included, or included in payroll, really. But that's where we really need to kind of have that one-on-one conversation and really kind of dig into the weeds a little bit more, because that can get a little bit into the weeds as far as what's required and how that's looked at and different things like that. But if you're paying yourself as the owner through payroll, you should already be included in that payroll summary, and therefore including yourself as the business owner.
Thank you both.
See another question in here I'd like to maybe tackle, or not necessarily answer the question, but provide some context to. It's regarding the quarter and the revenue reduction. The interim final rule from the SBA clearly states that it's either it's one quarter in 2020 versus compared to 2019. It does list out specifics if you were not in operation at any point during 2019 on how to calculate that. There has been and continues to be a significant number of questions specific to the revenue reduction piece, obviously being one of the largest qualification points for the second draw. And I would expect in the very near future for additional guidance to be issued specifically for the 25% quarterly reduction, which will maybe change some of the specifics, but definitely provide more clarity. And ultimately, as we found with the 23 iterations of the first round, is that the SBA and the Treasury did a nice job of trying to address specific issues and loosen things up. So just more to come on that, but it is pretty explicit today that it is 2019, or excuse me, 2020 compared to 2019.
Got two pretty continuous questions I've seen through this, and some texted in, but you know, on the first one, you had the option between 8 and 24 weeks. How many weeks of a loan can a business qualify for coverage?
So I'm going to peel that back, and I think of it this way. There's two different equations happening. There's the first one is how much you qualify for, and the second one is how you spend the funds. And so what a business is able to qualify for is generally 2.5 times your average monthly payroll. And that can be 3.5 times if you're in the certain NAICS code, as we talked about. But what you qualify for is 2.5 times average monthly payroll. And then completely separate from that is how you spend the funds. In other words, what's qualified expenses. Those qualified expenses are primarily payroll. At least 60% of the expenses have to be payroll. The other buckets that are included in those expenses include the things I mentioned, which were mortgage interest, rent, utilities, some technology now may be included in that, some PPE, personal protective equipment is now included in that. So they have expanded those inclusive expense buckets, but this is still primarily for payroll.
And to follow that up, what are some of the things, kind of this last question here, if you're using 2020 payroll, is a 2020 tax return required? And go ahead and probably peel that one back a little more as well. What's some of the stuff we're looking for, generally speaking, during application that they can go ahead and start preparing?
Right. So Aaron, I'm going to bounce this off you here live. My gut tells me, if memory serves, that if you're using 2020 payroll, we're also going to collect the 2020 tax return. Is that your understanding?
That's my understanding, unless there's a another. Yeah, that's my understanding. We can answer that specifically. It's going to be
something for us to maybe dig in more. Yeah, to your point, something we dig in more to. That's our understanding today is 2020 payroll would also require 2020 tax return. And that's where I go back and think about the 23 changes, the 23 clarifications that were made in last year throughout this process. We do expect more clarification to go. So, you know, our famous line is wait for SBA guidance, and that might be one where we have to wait for further clarification from the SBA.
I will say, though, you know, the first draw, there's no changes from the first draw, and the first draw income calculation wasn't based off of, or excuse me, the payroll calculation was not based off tax returns. That was based off of quarterly 941s that are filed. So we can and expect to be able to maybe go out on a little limb here. We are waiting for further qualification or clarification, but I would say that the 941s for 2020 would be sufficiently for calculating the payroll expense for 2020.
One question I saw in here, Blake, that I wanted to make sure I addressed, I thought it was a good question. So if someone did apply for a first or have already received a first PPP loan and are applying for a second PPP loan, there's some question about what all has to be resubmitted. What you'll find in the second draw PPP loan, a lot of that information will carry over to your application, but the application did change. And so there will be some additional information that you have to put in. As far as what we are requiring or need to have on as the bank, clearly if we already have the information such as a 2019 payroll summary and you're going to refer back to that, if we already have it from the first draw, we already have it, we don't need it again. So hopefully that'll provide some clarification and provide some streamlined approach to the second draw.
Here's another pretty good one. If someone was not eligible for the first round of PPP based on net income, in their example, it is a farmer, but we'll use general businesses as well, but is now eligible for their first draw, are they then eligible again for a second draw?
Yeah, it's a good question. So keep in mind, anyone that has not received a PPP loan to date is applying for the first draw. And so one of the parameters for the second draw is that you had to get a first draw already. And so if you've not participated in the program, you are considered a first draw applicant.
The timing of applying for the second draw after receiving the first draw is going back to proving that those expenses or those funds have been allocated and used or will be used. That's
yes.
Jeff or Aaron on this one, is there any distinct differences for any nonprofits? I know in the first there was not much difference as it pertains to this. Is that kind of the same feel for the second round?
The nonprofit piece, the one highlight that I've taken away from the guidance, and I think it was a result of the inclusion of the 501c6, is really related to lobbying efforts and income as it relates to lobbying. So 15% cap on lobbying expense. Anyone over that will not qualify. I don't know if that answered your question, Blake or Jeff, you want to?
Yeah, I think the only thing I'd add to that, and this gets a little bit more technical into the application, but every borrower has to identify individuals that own at least 20% or more of the business that's applying for the loan. Obviously, for nonprofit, there are no owners. So what the SBA has asked for is to include the person in which that will be signing the documents, what they call the beneficial owner form. But for those that are that will be applying for this, and we'll see the application, you'll see that spot. So nonprofits do have to still put an individual in there that's responsible for signing. So don't get sidetracked by the fact that the SBA asked for an owner. They do understand that no one is an owner of a nonprofit.
All right, so we're coming up on the end of our time this afternoon. I appreciate the questions. Again, appreciate you all taking the time to join us. All of us here at the Bank of Missouri, hopefully we've demonstrated today, got a great deal of attention given to what we know is an extremely important set of products to continue to keep the health and well-being of our small businesses alive and well in all the communities that we serve. Jeff, anything in closing?
No, I second what you said. Thank you everybody for joining, for being a part of this. Help us spread the word. I think it's important for Aaron and I and in the Bank of Missouri, this is a service to our community. So for anyone that qualifies for the parameters and wants to apply, we want to help facilitate that as much as we can. And so I believe we're going to share our contacts. Don't hesitate to reach out to Aaron and I. For those of you that are more familiar with some of our other lenders, Blake, Josh, Megan, Russ, Kyle, Christine, feel free to reach out to your lender. Nita Pickens has been a big help for this as well. Recently joined the team, but she's the person that you sent the RSVP email to potentially. So you can also reach out to Nita as well if you're wanting a contact or wanting a link to the application as soon as it becomes available, want to have a more in-depth conversation, et cetera. We're here to help.